wanted to talk about today what's coming up with the election. So, the big issue, financial issue, I think we need to talk about coming up with the election, and not just the markets or anything, but the tax situation, because that's going to change pretty drastically here coming up in 2025. So, whoever gets elected this next year is going to have a big say on how much you end up paying in taxes. And your taxes are about to shoot up pretty dramatically in 2025, especially if you make under $400,000 a year. So, yeah, I want to cover a little bit of what's going on with that and why it's important, and then we'll cover some of the other issues that the IRS is looking at. So here's Alex Wagner, and she's going to cover this real quick.
I want to tell you the story of two Americas. The America that Donald Trump lives in and the America everybody else lives in.
At Trump University, we teach success. That's what it's all about, success. It's going to happen to you.
That was Donald Trump's pitch for Trump University 2 decades ago. He marketed his school as a shortcut to financial success. You just had to pay him and his instructors first, and then you would know everything you needed to make it big. The only problem was that it was all a scam. As a result, Trump eventually settled a civil fraud case for $25 million. And that case gave us real insight into how Donald Trump views the average American.
Trump University, a series of for-profit real estate seminars launched in 2005. Ads promised that Donald Trump would handpick the instructors, but as a rule, he did not. A set of playbooks for the sales team coached them on how to market the courses, even to single mothers with 3 children who, quote, may need money for food.
That is how Donald Trump sees America, a country that is just filled with easy marks and fools to be scammed by a millionaire who deserves their money more than their children need food. At the same time, this is the America that everyone else lives in. This is Frances Sharples. In 2022, she was scammed out of $655,000 from her retirement fund by international criminals posing as tech support and bank employees. Now, that alone would be misfortune enough, but then Frances Sharples got hit with $100,000 in taxes. Taxes on the transactions where she was scammed out of her retirement money. Taxes on money she no longer has.
So, get this. So, because I've known clients who've had this happen where somebody contacts you saying there's a problem with your computer, right? And it's because they placed the virus on your computer. They sent you some phishing email with a virus, and then they call them up, and then they want full access to the computer, and then they get access to all your bank accounts and everything. And that's what happened to her, essentially. She got robbed of her entire life savings, her entire retirement, $650,000. But because that money was withdrawn, she still had to pay taxes on all of it.
Right.
Well, it used to be you didn't have to. But something changed.
Now, if that shocks you, it is because that IRS policy is relatively new. Do you remember when Trump and Republicans passed their big quote-unquote tax cut in 2017? The main thing that bill actually did was cut taxes for corporations and the ultra-wealthy. And to make up for that massive loss in government revenue, Trump and his Republican allies in Congress suspended something called the casualty and theft deduction, which means that if you are the victim of a scam, you still have to pay taxes on the financial transactions involved in that scam. And that is how Frances Sharples ended up footing the bill for all those ultra-wealthy corporate tax cuts after she lost her retirement money. Now, Democrats...
Now, the whole thing is we got to go back to back when they did the Trump tax cuts, right? So that act was the Tax Cuts and Jobs Act. All right, what it did essentially was it cut taxes for mostly the wealthy and corporations, but it also cut your taxes. Here was the catch. it cut taxes, it cut a bunch of loopholes, right? But what ends up happening is in 2025, for those of us who are lower than $400,000 a year or we're not wealthy, all of our tax cuts expire and it goes back up in order to cover the loss from all the tax cuts from the rich. So it's a pretty devastating situation that's going to happen here in the not too distant future. Where did I see if I found it somewhere? I might not have gotten it, but anyway, but that's the thing that's going to happen is your taxes are about to shoot up in 2025. They've already started to go up. Now, initially with that tax cut, the way they kind of scammed everybody with it, the Paul Ryan did it was, oh, everybody's going to get a tax cut. And you did. But what they did was they lowered the amount of required withdrawals from employers. So all of a sudden, yeah, your paycheck went up a little bit every month. But then at the end of the year, you didn't get as much in return because you didn't pay it in.
Right. So what essentially happened to me, I'll even use myself as an example, is I saw $30 more in my paycheck.
Mm-hmm.
And then at the end of the year, I actually had to pay in 3 times what I had the previous year,
Mm-hmm.
which was way more than the $30 that went into my paycheck.
Right. Because
So it really did me more damage. It didn't actually do me any good. Oh yeah, $30 more per pay period, but I paid 3 times that when I paid in.
Oh, no.
at
It
the end of
ended
the
up
year.
hurting the poor a lot more. But that was
Right.
initially how they tricked you was, oh, so you're going to see more every month in your paycheck. Well, that's true. But then at the end of the year, I'm going to owe a lot of that back.
I owed that and then some. Yeah.
Because you raised tax. So that's what's going to happen. So just be prepared that your taxes are going to go up. And I'm going to have Robert Wright talk to you a little bit about this. Is it Robert Wright? Yeah. Right here.
It's now official. Congress's own research arm, the Congressional Research Service, released a report concluding that the Trump Republican tax cut was a total bust. Number one, it did not spur economic growth. According to the report, quote, the growth effects tend to show a relatively small, if any, first-year effect on the economy. Number two, it didn't raise wages. Quote, the real wage rate for production and non-supervisory workers grew by only 1.2%. Number three, it didn't cause corporations to bring money home. Again, quoting from the report, the data do not appear to show a significant increase in investment flows from abroad. Number four, it saved corporations a boatload of money. Quote, corporate tax revenues were about $40 billion less than projected. Number five, corporations use the savings to boost share prices and executive pay, but not workers' pay. Again, quoting from the report, while evidence does indicate significant repurchases of shares, either from tax cuts or repatriated revenues, relatively little was directed to paying worker bonuses, which had been announced by some firms. So there you have it, folks. Trump's one big legislative achievement is now officially a big nothing burger for Americans, but a giant sop to big corporations, CEOs, and the rich.
And he's not half kidding about that, because what ended up happening was to repatriate a lot of the money. They said, okay, we'll give bigger tax cuts to corporations, right? And the thought was, okay, if we do that, and the wealthy people, it's still some of that trickle down thinking, but the thought was they'll repatriate more of their money that they're hiding overseas to avoid paying taxes and invest it back into the U.S. markets, which they did. But the thought was, okay, they'll invest it into more jobs, which they didn't, because now all of a sudden they had these huge tax cuts. They had these huge windfalls. Well, what did they do? Well, it's cheaper to get labor overseas, but I brought more money back to the U.S. But none of it went to the workers. It went to repurchasing stock shares. It went to investments in the market, but it didn't go back to the working class at all. So there was no wage growth that came from it. It didn't help the economy at all because none of that money went into the economy. It went into the market. So Trump would always brag about, well, the markets are up. Yeah, because you've artificially inflated them with this huge tax break.
Sure.
Right. On top of that fact, what ended up really screwing over workers in that deal was a lot of these companies, like I can't remember what they had the Foxconn deal, and that fell through. But what was it? Was it GM? Maybe I can't remember for certain. But there were several of these companies, and what they did was they said, "Okay, yeah, we'll hire whatever 20 or 30,000 more people, or whatever it is, right?" And they'd be like, "Oh, great, see, it's working." And they were like, "Yeah, but we're going to fire them all next year." Because what we're going to do is we're going to use the money to expand our automated systems and replace those workers with machines, which has been the bigger culprit of a lot of these factory kind of jobs going away. Right.
Wow. Yeah.
So it ended up being great if you were ultra rich, but it ended up being a real nightmare if you weren't and you were poor. I mean, and the U.S. Household share went way down of income. Now, we've talked about this, and we'll talk a little bit more about this in a minute. The economy's gotten better, and wage growth has actually started to go up and beat inflation for the first time in forever. But what was a lot of it that spurred it? Some of it was a lot of people getting out of the workforce because of COVID. COVID in general, but the government dumped a lot of money back into the workforce, and they give money directly to workers to stay home. So these people had extra money in savings, and then they realized, well, wait a minute, my quality of life is better during COVID because I'm not working 2 jobs just to stay alive. So that people got out and said, well, I'd rather make less than have more of my life instead of killing myself all the time. Which was
right, absolutely
part of that whole quiet quitting thing. And then what happened was you had a huge tightening of the labor market because you had all these old people leave, and then you had all these young people going, screw it. I'm not working for less than that. And so now what happened is wages have had to shoot up. And inflation's now gone down quite a bit. It's gone down pretty consistently. Up until recently, December, it went up a little bit. But yeah, it was like 22 months before that of decreasing inflation, right? So things were doing really well, but what was it that caused it? It wasn't tax cuts. It was government investment back into the market, back into infrastructure bills, infrastructure plans, creating new jobs. But that's money you directly throw into the system, right? So it's like, hey, corporations, I'll give you this benefit of this money or these really cheap loans or whatever, but you have to create jobs with them. If you don't, you owe us all the money back with interest, whatever the maximum interest is, and fines or whatever it is. So now the corporations are forced to hire more people if they want to get that money. As opposed to with the tax system, there's nothing stopping them from moving the money around wherever the fuck they want. So just my point is, basically cutting taxes doesn't exactly improve the situation here. But I want to